8 assets that can make you rich and retire early. Imagine a life where your assets work for you, generating enough income to cover your wants, not just your necessities. Achieving this milestone can mean the difference between a life tied to a 9 to 5 job and a life free to pursue your passions and interests. If you are trying to figure out what assets can give you this kind of lifestyle, we will have a rundown of 8 critical assets in this video. Stay tuned as we dive into them. Before we start, know that finding the right combination of assets to achieve your financial goals will be entirely up to you. But by considering the cost of entry, potential returns, level of involvement, and feasibility of each asset in this video, you can help ensure you are making the right decision. Now let's get started. Number 1. Real estate assets. Several real estate investing strategies can generate consistent revenue. However, the most lucrative is investing in rental properties. This involves purchasing residential or multi-unit properties and marketing them to tenants to earn rental income over time. Rental properties offer the opportunity to generate steady rental income over long periods of time. By employing an efficient property manager, you can ensure a smooth operation with minimal personal involvement. One key advantage of rental real estate is the potential for consistent income without requiring substantial upfront capital. Moreover, it facilitates quicker portfolio expansion compared to alternative investment avenues. For instance, starting with a single-family home, the rental income generated can be reinvested to acquire additional properties, thereby adding another income-generating asset and expanding your investment portfolio. Meanwhile, if the idea of directly owning properties feels daunting, but you are still drawn to real estate investment trust, or REITs present an appealing income-generating option. REITs function much like stock investment, focusing on companies within the real estate sector. These trusts can specialize in various real estate categories such as apartment complexes, office buildings, storage units, or parking garages. Opting for REIT investments allows individuals to engage in the real estate industry without dealing with the upfront costs and complexities associated with acquiring physical properties. Number 2. Stocks. Stocks refer to investments in business equity and allow investors to generate income through several means, not the least of which are dividends. More importantly, dividends are rewarded over time and require relatively low initial capital. It is important to know the difference between investing in individual stocks and investing in mutual funds. Individual stocks allow purchasing single shares in a company for industry exploration, while mutual funds involve investing in diverse stocks across multiple companies. Although individual stocks pose higher potential returns, mutual funds provide greater diversification, thereby providing less risk. One of the best income-producing assets is large-cap dividend investing, commonly known as the dividend aristocrats. These blue chips companies in the S&P 500 are known for consistent increases in dividend payouts. But certain sectors, especially in technology such as the internet and biotech, typically do not pay dividends. Instead, these companies reinvest most of their earnings to fuel ongoing growth. If you are interested in investing in stocks, be sure to familiarize yourself with the stock market and get a better idea of the types of companies you may want to invest in. Number 3. Private equity investment. Private equity investment refers to the process of investing in private companies, many of which are in the early stages of development. It can range from venture capital investments in startup to buyouts of established companies. This can represent an attractive opportunity, particularly if you find yourself in the midst of the next successful startup company. But while it presents an appealing opportunity, it requires some consideration. The most important thing is that it will take research on your part to identify the right companies to invest in. It is not uncommon for private companies to fold up in their first few years, so ensure you do proper research as you look for businesses to invest in. Also, there is a lock-up period in private equity investing. This is a time frame during which investors cannot access their invested funds. The lock-up period lasts from 6 months to a decade, depending on the company. Number 4. Building a business. Among the best income-generating assets is a particularly interesting investment idea. Opening your own business. This could be whatever you want to be, a product for a sale on Etsy, or perhaps your own real estate investing business. Building a business is a great way to increase your cash flow while also pursuing something you are interested in. Perhaps the biggest benefit is that you can devote as much or as little time as you want to this project. It could start as a side project to supplement your regular income and one day turn into your main focus. There are numerous business opportunities and options available that could be of your interest. Perhaps some of the most common are opening franchises, whether for restaurants or gyms in your area. As you might expect, these businesses can take a lot of capital, time, and work before operating successfully. An alternative business idea could be selling any of your skills online. For example, if you have experience in graphic design or copywriting, you can pursue freelancing opportunities until you have enough clients to start your own business. Another unique idea could be to buy and sell websites through platforms such as Flippa.com. Building a business of your own can ultimately turn into an excellent income-generating asset. It all depends on how much work you can put into it. I recommend researching new ideas, looking for a need in your market, and then finding a mentor to help with any questions you may have in the beginning. This route will take time to get started, but it could be a great way to pursue your passion while increasing your overall income. Number 5. Farmland. Farmland stands out as one of the top income-generating assets for several reasons. Unlike many investments, it offers stability with minimal volatility and a low correlation to the stock market due to its essential role in food production. The historical consistency in demand for farmland adds to its appeal. Investors interested in benefiting from this asset can choose between two approaches. First, you can directly purchase land and lease it to a farming company. This requires careful research on location and securing a reliable tenant. Another approach is to invest in a farming-focused real estate investment trust or crowdsourcing platform. Number 6. Websites and apps. Another income-generating asset and one with a relatively low entry cost are websites. Investors can purchase a domain related to a popular topic or upcoming trend and eventually sell the websites to interested buyers. An alternative option is to spend time building the website through content creation. Once the website has generated more traffic, investors can use paid ads and sponsorships to earn income through affiliate marketing. This can become a steady income stream, provided you maintain the site. Just like websites, apps can generate income through various monetization methods as well. This includes in-app purchases, advertising, subscription models, and selling the app itself. Successful apps with a large user base can provide a steady revenue stream. If the app is also successful with a proven track record of user engagement and revenue generation, it can be acquired or invested in by the individuals or companies. Number 7. Royalties. Royalties are a unique form of investment. They can be earned on any form of media or intellectual property, including books, music, images, artwork, photography, copyrights, and patents. As the owner of one of these mediums, you can generate royalties over time as others contract for the usage of the item. Typically, these earnings are generated as a percentage of the fee charged. Real estate owners with a mineral and water rights can also earn royalties for allowing the usage of these resources. Also, you can generate royalties from franchises. For instance, McDonald's Corporation generates royalties from every one of their franchises opened around the town. Royalties are an excellent way to earn additional money from assets that are owned. Number 8. Peer-to-peer lending. Peer-to-peer lending serves as an alternative to traditional banks, facilitating loans for borrowers who may have been denied by conventional financial institutions. This industry has evolved into a lucrative multi-million-dollar business, offering a viable avenue for generating income. Being someone else's bank allows you to generate passive income that can boost your net worth. Leading peer-to-peer lenders suggest that investors can achieve annual returns ranging from 5 to 7%. With this type of investment, you will still receive a consistent rate of return regardless of whether the value of the underlying asset goes up or down, which translates into funds you can reinvest and use to gain more wealth. However, it's essential to acknowledge that, like many income-generating assets, peer-to-peer lending carries moderate risks, as some borrowers may default on their contractual obligations. So, no matter where you are in life, you can start building income-generating assets through these options. If you get value from this video, like and subscribe to this channel for more. We'll see you in the next video.